Hey everyone, welcome back to the channel. In today's video, we are going to take a look at Vale SA again. In my personal opinion, Vale is a prime target as a value play. Don't take my word for it. We'll go through the numbers together. We'll also take a look at some of their goals which they have planned for 2023 to 2026. We will also take a look at the charts. And lastly, I'll give you an update on the options that we bought for Vale and how they are performing. If you get any value out of today's content, leave that like. And without further ado, let's dive in. Before we begin, folks, just remember, this is not a financial advice for you to buy, sell, or hold Vale. This is just my personal opinion, and always do your own due diligence before you invest your hard-earned money. So let's start off with the stock price. Vale is currently trading at the end of Friday at $16.55. The stock was up 2.48%. In the last 5 trading days, the stock has gained 6.23%. In the last 1 month, the stock has gained 22%, and so year to date, if the stock is up 18%. When we kicked off the year, Vale was trading around $13.81, and now the stock is up to almost $16.55. One of the reasons why Vale is such a great value play is because if you look at these numbers, the forward PE ratio of Vale is 3.94, whereas the sector median is 14.72. This makes Vale a very prime target as a value play. Current market cap of Vale is $78 billion. They have a total debt of 18.58, cash reserves of 12.6 billion. The enterprise value of Vale right now, 85.62 billion. So their enterprise value is higher than their market cap. And this is one of the reasons why they have so many good ratings on valuation. They have A+, on growth they have B-, but on profitability they have A+. So between the valuation and profitability, this company is bringing a lot of great value to investors. Now, of course, the momentum right now is slowly picking up on Vale, and we'll touch upon it why it's picking up. And from a buy rating standpoint, both from the Seeking Alpha authors, the Wall Street, and the Quant, they have a buy or a strong buy on this particular stock. So some of the bullish points that the author talks about is Vale is getting a lot of momentum and growth from the new trends. However, it is considered as valued as a legacy producer. Also, we have a strong outlook for nickel and copper, and because those are the elements that are used in the electric vehicles. Vale is a strong company when it comes to the minerals or mining of minerals. And as the electric vehicle proliferation takes place in the next decade, Vale is set to gain from this movement because they are a very big player in nickel, iron, and copper. And these will start showing results in their future earnings as we go through the electrification. They have been consistently improving their iron ore capacity to be prepared for the future demand. Now, they do expect that there will be a production sales gap in third quarter because they are transitioning the inventories across the supply chain. And we know that a lot of companies have been having issues with supply chain, chip shortages. So that is something that is ongoing, but we do see that that is not going to be a permanent phenomenon. That will come to an end at some point in time, and things are already starting to improve. Now, from a 2022 production and sales standpoint, they expect that the capacity and the quality increase is more likely in fourth quarter 2022. Iron ore will be the key driving factor for Vale's growth in the future. Now, why Vale is increasing the iron ore capacity is because Vale is expecting that a lot of companies are going to build gigafactories and large structures that will be dedicated to electric vehicles, and they want to take advantage of being the supplier of iron ore for these constructions. Also, being a large enterprise where they have worldwide presence, it also helps them not to be just supplying to the regional players but also in the international markets. So from a revenue standpoint, they brought in, as of last quarter, was $40 billion. The cost of revenue was 19. Gross profit was about $21 billion. So this is not a small company that you would just sneeze on. They are bringing billions of dollars in profit in 1 quarter. The operating expenses and income were about $18 billion, $18.8 billion. Their earnings from the continuing operation, they brought in about $4.7 billion. And one of the most important parts that I look from a company standpoint is their total assets and total liabilities. The total asset is about $97.2 billion, whereas their total long-term liabilities is only $54.63 billion. So this itself gives me a very good feeling about the company and the growth potential because in the industry they are in, and because it is not just a growth stock, but it is also a dividend-paying company which pays about almost 13 to 15% dividend. Now, I don't expect that to continue for the rest of our life, but that is something that should be considered in making a decision if if you plan to buy Vale. This is our original chart. We built this chart when we first started investing in Vale. Top yellow line and the bottom yellow line are basically my two resistance levels and the support level. So 1032 acts as our absolute support level. So as of our last video, we talked about Vale was breaking out from this channel of this downward movement, and I wanted to see if Vale would be able to break this resistance of 1507 and make that as a support. So as of now, after they did break that over here, they did touch upon this support level a couple of times, and now they are slowly to creep back up. Immediate short-term price movement is that they have already gained about 18% in the last 1 month. Unless the broader market really sees a big downturn, we could still see Vale continuing to creep up to that 1748 level. At this point of time, I will be very careful in adding more Vale or over leveraging in my portfolio from an investment standpoint. Now, from a long-term standpoint, I'm absolutely bullish on Vale. Also, I wanted to give you an update on the options play that we had played on Vale. Currently, we have about 3 contracts and a $17 call, expiration of January 20th, 2023. We are up about 119% on that. We also have 2 contracts for 2024, January 19th expiration. We are up about 50%. So both of them, I have trimmed about half of my contracts. I had about 6 contracts at the $17 call and I had 4 contracts. So I took some profit as the Vale stock ran. My next move on Vale would be, I would be keeping these contracts because I did take out my initial investment. Everything else is now house money we are playing on. Some of the latest news that we have on Vale is that Vale is expected to pay about $1.65 billion in that reparation this year. This is the dam burst that happened 3 years ago. Figures do not include spending on the compensation to individuals affected by the disaster, which is still being negotiated. So we could see a higher number that they would be paying out to this dam disaster. Vale is expected to report its earnings on February 25th. So I would be doing a live stream on their earnings report. What I'm really looking forward to that earnings call is to not just see how they did in the last quarter, but I want to look at the 2022 outlook and the future guidance. Also see how the management reacts to some of these payments and how does that really impact their cash flow and income statement. So there you go. That was a very quick update on Vale SA. We did some technical analysis. If you liked what you saw today, don't forget to hit the like button, click on subscribe and ring the bell notification. I will see you next time, investor family, but don't forget to invest for tomorrow.